Welcome everyone, thanks for joining us today. Before we get started, I'd like to acknowledge the traditional owners of the land on which we meet today. Today I'm on Kaurna land and I pay my respects to the Kaurna people and also pay my respects to elders past, present and emerging. I extend that respect to all Aboriginal and Torres Strait Islander people with us today. For those who don't know me, my name's Aaron. And I'm the Stakeholder Engagement Advisor with the SA Portable Long Service Leave Scheme. And like all of our past webinars, I'm joined by Mandy, our Operations Manager, who's waving at you now. She is our expert extraordinaire. And lucky for you all, today's topic is one that she knows everything about and has a good grasp on. So we're all in very good hands. Today's session is a practical walkthrough of the State Long Service Leave one-off return and what you need to do to complete it. This is how we collect information about your workers' service in the community services sector and any long service leave entitlements that were accrued before the portable scheme started. By the end of today's session, fingers crossed, you should feel fairly clear about what you need to do and how you need to go about it. The disclaimer to that is, and the best response to that is if you do have any questions or if you do feel a little bit confused, we've got plenty of resources available to you and staff to support you. And we'll get into that a little bit more later. Hopefully, you should all know that the scheme started on the 1st of October 2025. So we're probably 4 and a bit months in. By now, you should have registered your organisation. You should have registered your workers. And you should have submitted your first quarterly return and paid your first levy on the 21st of January. That said, if you have any questions in relation to that, or if you haven't done that, or if you know anyone that hasn't done that and is struggling, please let us know. During those early months, we focused on giving the employers time to get familiar with all of those things that they needed to do, the registration of the organisation, the registration of the workers and that quarterly reporting requirement. And what we didn't want to do was overload you all with everything we needed from the get-go. So we just wanted you to focus on those key things first and foremost. And now we wanted to introduce the need for you to complete this once-off quarterly return to let us know how much service your workers have pre-scheme. So now that that foundation is in place, it's time for you, the employers, to provide that pre-scheme service information so we can add it to the workers' balances on their on their worker portal. So the State Long Service Leave one-off return is completed only once. It captures long service leave service and entitlements that workers built up before the portable scheme started. This includes service to the community services sector, long service leave accrued, long service leave taken, and any long service leave balance or employer liability as of the 30th of September 2025. This information sits under the Long Service Leave Act 1987, not the portable scheme. So the purpose of this return is to bring that pre-scheme information into our systems. So each worker's service history includes their full service record. We have been asked numerous times from workers why their balances don't show up in their worker portal. And it's for this very reason that we didn't have the information to include, and hence why this return is important for those balances to be reflect the true service that those workers have accrued. And like I said, for most employers, this is the only time you'll ever need to complete the State Long Service Leave return. Once it's submitted, all future service is going to be managed through the quarterly returns process. There is a step-by-step guide on our website, and I'll drop the link in to the chat to that soon. The other support that we'll have is a step-by-step video with someone stepping you through it. We haven't completed that yet, so we won't be showing a video today, but it will be available soon. Who needs to complete it? This return essentially needs to be completed by any employer who has who had eligible workers employed before the 1st of October 2025. It even applies to workers who are casual, not just part-time and full-time. It applies to a worker who might not have reached 7 years of service with you as yet. And it also applies to you as an employer, even if you only have a small number of eligible eligible workers, my bad. This return is completed at the employer level, not by individual workers. The state long service leave one-off return will be generated in your employer portal tomorrow, the 4th of February. You'll be notified by email when the return is available, so there's no need to keep checking your portal. If you are like me and you're impatient, you can, but you will get an email notification. Once it appears in your portal, you'll have a month to complete and submit the return. The important thing that I need you all to know around this return is there is no levy payment required, and there is no need to focus on anything but providing us with that information around that worker pre-scheme service. The employers who have registered later, the state long service leave return will be generated and completed as part of their onboarding process. So like I said, for most employers, this is a one-time task only. And once it's submitted, you won't need to complete another return for the state long service leave. It'll be part of an onboarding process for any new workers. Mandy, just going to pause right there. Did I miss anything that was really important that needs to be included? Thank you very much. It's good. So I really wanted to focus on what we need and what type of information you need to provide as part of this process. So if I go back to the point where the return is very similar to what you would do for a quarterly return, it's exactly that. However, like I said, it doesn't actually need you to pay a levy. It's just information sharing about each of your eligible workers. So for this return, you'll be providing information for each worker who is employed, like I said, before the 1st of October. For every worker on the return, you'll need their start date with your organisation, which is the date the worker first commenced employment with you. You'll need an end date for this return. And for workers registered from the 1st of October last year, 2025, the end date for their state long service leave entitlements is the 30th of September 2025. So really important to remember that. You'll also need to provide their total months of service captured in months, and you'll have up to 5 decimal points, decimal places, if needed. What I was advised yesterday is if it goes beyond 5, it'll round up to the next number after 5 decimal places. An example of this, I guess, is you can see in the bottom right hand of this table is that if a worker started on the 1st of November 2017, their months of service to the 30th of September 2025 would be 95 months. Essentially, that's 7 years multiplied by 12 months plus 11 months. So fairly simple, hopefully. If you've got any issues or need some support in that space, please let us know. The other bits of information we'll need are long service leave accrued. So the amount of the long service leave accrued under the Long Service Leave Act 1987 and recorded in weeks. And before you jump on me around weeks and hours, I'll get to that. We'll need long service leave taken, the amount of long service leave that the worker has already taken under the State Act, and that's recorded in weeks. We'll need the long service leave balance, which is essentially the long service leave accrued minus the long service leave taken, again, recorded in weeks. And in some cases, you'll also be asked to provide an employer liability amount, which I'll explain shortly. So this information comes from, or should come from, your existing employment and payroll records. Long service leave under the State Act is already accrued in weeks, so you're not being asked to calculate anything new. I just wanted to touch on this a little bit around converting hours into weeks. We've been often asked how employers do this. If you've had this question in your head, or if you've spoken to our team about it, guarantee you're not the only one that's done that. So we'll just try to go through this a little bit now. Some employers record long service leave in hours, even though the legislation records leave is recorded in weeks. Many payroll systems automatically convert weeks into hours. So it's nothing that we haven't heard before, and we'll try and work out how you can simplify this for the long service leave return that we need. For the long service leave, for the state return long service leave must be reported in weeks. So the slide will show you how weeks and hours align. And the key point is that a week of long service leave reflects the worker's ordinary weekly hours at the time the leave is taken. So an example for you here is you have a worker that has 10 years of service. They've worked 20 hours per week average. And because they've got 10 years of service, they're entitled to 13 weeks of leave. So it is essentially the entitlement times the average weekly hours, which will give you how many hours of leave they're owed. So it's a pretty simple formula, and it does adjust obviously to how much they, how many, I guess, years of service they've got, plus how many average weekly hours they have. So it all determines, it's already determined by those two key bits of information. While the return records leave in weeks, the hours paid are always based on the worker's ordinary weekly hours. And the second example that I've got here for this really is, I guess, just to make it fairly clear for you, is if an employer, if you've got a worker that's had 11 years of service, and their average weekly hours works out to be 21.667 hours per week in this instance, they are entitled to, they're entitled to 13 weeks of leave, and then the calculation works out in that space of 281.67 hours of leave. Mandy, do you want to jump in on that, or is that fairly clear and simple? Fingers crossed it's simple. Okay, cool. Thank you. I can see Mandy responding to some questions. That's great. Thank you for doing that. Just going back to that, no doubt there will still be some questions in this space. It shouldn't be too difficult for us to try and share with you how to work it out. But it also just takes a little bit of, I guess, of using those examples, a little bit of time to just think about it in your own space and work out what you need to do. Oops, my bad. Months of service in this space here is and refers to the total time a worker has been employed by you. It needs to reflect continuous service under the Long Service Leave Act. When you calculate months of service, you count from the worker's start date and you go up to the 30th of September 2025 and you deduct any full weeks of unpaid leave. So it might be a little bit of calculation, or hopefully you've already got it captured, but it might need a little bit of calculation from your end. The figure that we need is entered in months and can include decimal places, like I said, up to 5 decimal places. If we use that example that we used before, that worker who started on the 1st of November and working through to the 30th of September, they would have had 95 months of service. The key point is that this is about the time worked, not the hours or the work patterns or the contract type. And if a worker was employed during that period, their service is counted unless there was unpaid leave that needs to be deducted. So a really important part to remember in that space. For the state long service leave return, long service leave, like I said, I'm going to feel like I'm saying this repeatedly. Long service leave is recorded in weeks. So under the state system, a worker accrues 1.3 weeks of long service leave for each completed year of service, and only full years completed are counted when calculating accrued leave. Partial years don't add to the accrual. So if a worker has completed 7 full years, they will have accrued 9.1 weeks of long service leave. And then you'll record long service leave accrued in weeks and long service leave taken in weeks if the worker has taken any leave. The long service leave balance is simply, like I said earlier, the accrued amount minus the amount taken. Hopefully, most of this information for the employers is already being tracked through their payroll or HR systems. And just to remember, you're only reporting it as it stood as the 30th of September 2025 before the portable long service leave scheme started. We just want to touch on employer liability quickly. Where a liability does apply, it is the amount that would have been payable to the worker for long service leave as at the 30th of September 2025. It is calculated using the worker's ordinary weekly rate of pay at that date and multiplied by their long service leave balance in weeks. So again, going back to that example, if a worker had a balance of 7 years of service, which is 9.1 weeks, and an ordinary weekly rate of $1,500, the employer liability would be $13,650. And that is the figure that reflects the employer's position at the start of the scheme. There are obviously different examples, and there are different criteria that you would need to work on, but it's really important that the service or the liability in this space is captured as part of this return if it's applicable. So just like the quarterly return in your employer portal, the state long service leave one-off return will be accessed through your employer portal. It will be available from tomorrow. I don't know the exact time, but it will be available from tomorrow, and you will get an email notifying you that it is available. You'll start by logging in using your existing employer portal login details. Once you're logged in, the return will appear on your dashboard, just like you can see on your screen now. The return type will say state long service leave return, and it will also be available in the returns drop-down box as part of the headings on your dashboard. There are 2 ways to complete the return. Just like the quarterly return, you can do it as a manual entry on the dashboard, where the worker details are directly entered into the portal, or you can do it via the template download, which I guess we would recommend if you've got a big number of workers, just to help you expedite the form. It obviously is a little bit faster and reduces errors as well. One thing to note is if you see an error pop up on your screen when you are entering the details, it's likely because you've entered a worker already listed. So you've created a duplicate of the same worker. If that's the case, you'll just need to identify the duplicate and remove one of them. Or do we, I think Mandy, you might just need to check on that one. Do we do the removal, or can the employers remove the duplicate?
Not 100% sure. I think we might need to, so let us know if it's on there, but we'll try and do them beforehand. But if there is a removing button, go for it. But I think the key point here is don't add a worker if it's already on there.
Yeah. Yep. All right. Thank you for that. Appreciate that. I know that's a fairly brief, I guess, overview of the state long service leave return. The good thing is you have a ton of resources available to help you through the process. Like I said, we have a specific guide for the state long service leave return on our website under the toolkits tab. Obviously, that sits alongside all of our other toolkits that we have created over the past year or so. This webinar will be recorded and will be uploaded onto our website as soon as possible. I'm getting better and better at it every time, so hopefully, fingers crossed, we'll have it up by the end of the day. We have plenty of FAQs and staff ready to take your phone calls and answer your emails if you have any questions specifically related to your organisation that you feel like you're a little bit confused about. I guess, like I said, and I say many, many times, the key message here is that you're not on your own. There's multiple ways for you to get support whenever you need it. I know Mandy's been busily answering questions on the chat, which is awesome. Thank you. So I encourage you all, and you've probably heard me banter on about this a lot, encourage you all to save our website as a favorite on your PC. You'll be able to find it easily that way, and you'll be able to just check in on any of your questions through our FAQs or whatnot. There's a phone numbers and an email address to contact our team if you have any specific questions and you need some support. And also, we do post fairly regularly on our two social media platforms, LinkedIn and Facebook, around some of the things that are upcoming or some of the things that we're asking employers and workers to do. Just the real key bits of information so you know that you know what's coming and when you need to do it by, and also, I guess, what the long service leave, portable long service leave scheme is all about. Mandy, do you have any questions that we need to talk about a little bit, or anything that's crazy, or do we want to open it up now to people to ask some questions if anyone has any?
Definitely unmute myself if I'm going to talk. I think we should open it up for actual loud questions.
Yeah, loud questions. I love loud questions. Excellent. Okay, who's got a loud question for us? Does anyone willing to ask some questions, or have they got anything that's concerning them at all? Yeah, Sue, you're first up. Sue Tapp. Just make sure you unmute yourself before you talk.
Yes, I have. When you mentioned that if applicable, you need to calculate the value. Mm-hmm. When is it applicable? Is it only for those that have reached the 7 years?
That is correct.
That's right.
Yes.
Yeah, if they reach the 7 years at 30 September, that's when you need to calculate the liability as at 30 September.
Okay. And I'm seeing one of the other chats. And so we have lots of casual employees. Some weeks they work, some weeks they don't. If they just don't work that week, do we count that week as service or not?
It's the same as under the Long Service Leave Act 1987, and that only excludes the week for service continuity if the person's taken leave without pay. So if they just didn't work, that's still included for service continuity under the Long Service Leave Act, and therefore you include it. So what we're doing is capturing the data that you already have or should be capturing under the Long Service Leave Act and just putting it into our system.
No worries. So once we've calculated that dollar value for those people over 7 years, we're giving you that dollar value. Mm-hmm. Is that all we'll ever owe?
For those workers, yes. It's a static liability at the 7 years. And yeah, it's just that.
Because I'm going to be providing this information and I have my annual audit sort of the week after where I need to present this information. So the workers that we don't give you a dollar value for, those that have not worked 7 years, how do we know how much you're going to ask us to pay for them down the track for what they've already done?
At the moment, you won't. So when they do reach 7 years of service with you as an employer, after the schemes commence. So some of it is under the Long Service Leave Act 1987 and some of it's under the Portable Act. At that point, when they do reach that entitlement, you'll be able to calculate basically how many weeks of leave your portion would be worth. You will need, if you want to keep the accurate numbers, you'll need to keep a running total of what their weekly rate of pay is to be able to actually calculate that liability as it changes based on their weekly rate of pay. The only time you'll be able to capture an actual static value is if the worker terminates with you and you're still holding that liability. So if the worker terminates before claiming all of the long service leave that they've accrued before the scheme starts, then you can calculate your liability based on what it would have been on their last day of work with you.
And you were talking about their weekly rates. So how's that different? That seems different to what it was before, because they previously, if you took long service leave now, we paid you at your current rate.
Yep, so this is the same.
Yeah.
So for workers who reach their entitlement after the 7 years, the portion of their service that you guys are holding on to from before the scheme started, that's paid at their weekly rate whenever they claim. So it's calculated based on the same as the Long Service Leave Act would be. And in the future, again, it will be still calculated on whenever they claim. The only difference is if they, like I said, if they terminate with you guys before they claim, then that rate becomes static at whatever it would have been on their last day of work with you.
Right. So I'm just thinking for my return for the end of year, our liability for this scheme as at the 30th of September, the calculation for those that are over 7 years, that's what they will owe, and we'll never have to pay more than that, correct?
Correct.
With the staff that are with us and are continuing, we will have to pay whatever it is the rate is when they hit the 7 years. Is that correct?
You'll have to pay the rate when they claim. So
when they claim, yeah, okay.
Yeah.
And then the ones, so they're probably best to be treated the same way as we're treating people now, in that we do this huge calculation. All right, and then there's the staff that have left. So if we had a staff member that was already with us and has since left since we started reporting, what do we calculate for them down the track? At the current rate that they were getting paid times the amount of time that we should have paid?
Yep, exactly that. What they were getting paid. Like if you'd paid out their payment on termination, then you would calculate that as your fixed liability.
So we have a fixed liability for anybody that's left and that has done less than your 7 years. We have a fixed liability for those that are over 7 years. It's only the ones that are not yet 7 years, but are still with us that we won't know that there is no fixed amount.
That's right.
Great. And now I need to explain that to the auditor.
You got this.
You got this, Sue. Sounds like you understand it.
Oh my God. I mean, long service leave is always the bane of my existence because I have to up it by future values and times it by all these government rates. It's insane. So I'm just going to have to do that for less people. Only those people that have been with us between, less than 7 years. All right, thank you.
You're welcome. Sue, can I just jump in, Mandy? You correct me if I'm wrong. For those workers that haven't reached the 7-year entitlement as yet, for this claim form, you would enter 0 on the liability. Is that correct?
Yes. On the state long service leave return, if the worker didn't have 7 years at 30 September, on the employer liability field, you put 0.
And that's really important to know because you can't leave it blank. You have to put 0 in there as far as I recall. And even though that there might be a liability in the future, but right now at the 30th of September, it would be 0. The other thing, that's all right. The other thing, I'll get to you in a minute, Charlotte, my apologies. The other thing just to recall from what I've been told as well is when you do the template form, so the Excel spreadsheet template, you can't, unfortunately, I believe, use a formula base to work out what your totals are on the spreadsheet because unfortunately our system won't recognize the formula value. So it actually has to be a number value, not a formula. So just to be wary of that when you're actually completing that in that column specifically as well. So
Yeah, if you want to use a formula, do it in a separate spreadsheet,
Yeah.
then copy paste the value in instead of the formula in.
Yeah, so just have to be aware of that, because it will come up with, you know, the red flags as you're trying to submit and telling you you've got something wrong. Unfortunately, it is what it is. Charlotte, you have a question?
Yes, hi. It's just to clarify what
Hello?
we've been going through on anyway. So we have quite a few people that have claimed long service leave via the scheme and been paid via the scheme since the 1st of October. And so I just wanted to just double check. I know it's in writing and I know we've hit in the chat, but we've got the liability as of the 30th of September. And now you're saying we don't need to reduce those ones that have been done by the scheme because you'll handle that, but those that haven't had any will reduce. That will stay as
So
same.
for those workers, for those workers who've already put in a claim through portable long service leave, so not where you've paid them directly,
Yep.
but where they've claimed through us. So we captured that data about their state long service leave accrual on the claim form itself. So that was that top section.
Yeah, the one I sign
entitlement
every
bit.
time. Yep.
Yeah, that one. So that's the same data as we're capturing on this state long service leave return. And so we've already got it for those workers. So you don't need to report it for those workers. The values that you gave us already have been used, and we'll keep using those, but reduced based on what we've already paid the worker as well.
Okay, so then when I do the return, I need to make sure that I take them out.
If they're not already taken out, yes, you should take them out.
Would you
But
have taken them out?
I think the plan is for us to take them out, but I'm not 100% sure. So keep an eye on it. If you see it, yes, I'll check. But if you see someone on there that shouldn't be on there because you've already reported for them, then do take them off. But we'll also be getting through those as well.
Okay, yeah, sorry. We've had obviously quite a few that have applied and been paid through the scheme since October. So I was like, don't want us, you know, deducting too, you deduct, we deduct, and then we're leaving them with nothing.
The good news is we keep records of everything. So if something kind of gets mixed up, we have records of what's already been claimed already. So we'll be able to just fix all of that up.
Yep, cool. Thank you very much.
Thanks, Charlotte. Rebecca.
Hi, I'm just going on from that, and I think you've answered the question, but just to clarify, so for workers that have taken long service leave after the 30th of September, but not through the scheme, that because I've called previously and been told that they needed to fill out a long service leave agreement to pay form for those ones. So I don't know. So do I adjust that leave taken post 30th of September in this state return, or do I lodge that as at 30th of September and then also lodge the agreement to pay for the amounts they've taken after that?
When you do the state long service leave return, deduct anything you've paid them already from the balance, because what we want is the actual current data. So if you paid them directly, you know what you paid them already, then just provide us with the numbers minus what you've paid them already, so that we have the information on the state long service leave return reflects what's left on their account.
So as
and what's
now,
left of your liability. Yeah.
Okay, fantastic. So just one state return and I don't have to lodge all the extra forms. Brilliant.
No, the extra forms are really just to demonstrate that both the worker and the employer agreed to the worker receiving that payment directly. So, and that's again, just because the legislation says that that's how that needs to happen, and it needs to be an agreement between them. So I guess to avoid anyone trying to force anyone to try and pay something, it just needs to be all kind of in writing. And that's
sorry, so you're saying I have to lodge both?
Ideally, yes, you have the agreement form so that you can show that, yes, we both agreed to this and I didn't try and force any liabilities on anyone. Yes, that's what the form's for.
Okay.
But what you report on the return, the agreement form is to confirm it was an agreement, and what you report on the return is to get the data up to date.
Okay, brilliant. Okay, thank you.
Thanks, Rebecca. Thanks, Mandy, for explaining that one. Sue, I see your hand up again.
Yes. So going back to the casual workers, so for the return up to the 30th of September, it's only if they've said, I'm taking unpaid leave. And that's, I don't even begin to imagine how I'm going to calculate that, but that's my problem. For the workers that we've already done the first return for. Is that different? I was under the assumption that if they didn't work, we didn't put a number one in that, we didn't count that week. Is that correct? Or have I stuffed up my first return?
No, that the way you report the weeks worked on the normal quarterly return is very different to how we're capturing the service continuity,
cool. So
because they're done under different legislation. So you did the return right, and you understand what you're doing on the state return. Everything's under control.
Right. I just don't know how I'm going to get that information, because I don't know. I just know that we didn't get a timesheet. Did they
just have a look at the
work?
leave? Yeah, just have a look at the Long Service Leave Act 1987, because the way it reads is that the casual workers need to actually take leave without pay, and that's when it's deducted from service continuity. And most employers, I don't know what you do, but or a lot of employers do capture leave without pay as like a work type in their payroll system, so they can calculate periods of leave without pay.
And we do for part-time staff, but not for casuals. So anyway, that's our problem, not a your problem.
Sorry.
Thanks, Sue. Appreciate that.
There's just a question in the chat, if that's okay, Aaron.
Please.
So we've been talking in the chat about the 7-year rule and when employers have liabilities and stuff. So if a person had 7 years of service accrued at 30 September, then the employer has a liability for the long service leave accrued before the scheme starts, and you continue to hold that liability until it's been claimed by the worker. So it doesn't go away until it's all been claimed. The second part is if the worker reaches a long service leave entitlement, so that 7-year mark, with that employer, that includes service before the scheme started and service after the scheme started, all of that, if that equals at least 7 years, then their service before the scheme starts, the employer continues to hold that liability as well until that's been claimed. The only difference is with that one that sometimes you don't know what that actual dollar amount is, because if the person's still working for you, it varies depending on their rate of pay. Once they've terminated, then you do have that dollar value. If the person leaves your organisation after the scheme starts, but before they have reached 7 years with that organisation, the service before the scheme starts goes away, unless you have an agreement, an enterprise agreement that says that you can have long service leave earlier. So someone out there has an enterprise agreement that says that their workers can have long service leave at 5 years. Those employers do need to hold that liability, because that's what they agreed, was that long service leave would kick in at 5 years. But pretty much everyone else has it at 7. So if the workers do reach an entitlement for long service leave, which is the 7 years, either before or after the scheme, you need to continue to hold the liability for that long service leave until it's been paid. If they never reach 7 years with you as an employer, the liability for long service leave before the scheme starts goes away when they terminate.
Hopefully that made sense, Justine.
Hope so.
All right. If not, Justine, just chuck another chat in or put your hand up and we'll go from there. Warren, good to see you.
Thank you. This is getting a bit down the track, and I think the first question sort of touched on it, but I just wanted to clarify. An employee who has service before the 30th of the 9th, before the 1st of October, ends up subsequently getting service. There was a discussion about the rate of pay that's applicable. Is the rate for the pre-scheme service the same calculation methodology as the scheme service, which is an average of their income, or is it a different calculation method for determining their rate of pay for the pre-scheme service?
It's different. So the pre-scheme service is calculated based on what the Long Service Leave Act 1987 has. So when a worker does make a claim for service that was accrued before the scheme starts, we're going to come to the employer and say, hey, if you were paying the worker for long service leave today, what's their weekly rate of pay? You're going to tell us, calculating what you would pay them for their average weekly rate of pay on that particular day, and that's the rate we're going to use for any pre-scheme service.
Okay, sorry, just run that past me again.
That's okay,
you're right. So the weekly rate of pay for service before the scheme starts is the same as under the Long Service Leave Act. So when the worker makes a claim, we're going to come to you and say, if you paid the worker today for long service leave under the Long Service Leave Act 1987, what would be their weekly rate of pay? So what you'll do is work out their average hours over the last 3 years, multiply it by their current rate of pay, and then give us that weekly figure. And that's the one we use for the service accrued before a scheme started. So that's what we're going to pay the worker. But like we talked about before, if the worker had already reached an entitlement when the scheme started, your liability is still fixed. So what we pay the worker is different to what you would pay us. If they reach that liability after the scheme starts, then what we pay the worker is what you're going to owe us as well.
Yeah. Okay. All right. Thank you.
Thanks, Byron. Have we got any other questions? I don't see anyone's hand up, which is good, unless someone's being a bit nervous and shy. That's all good. I think it's like Mandy said, the liability side of things is, I guess, all dependent on how much service the worker has with the organisation at the 30th of September 2025 mark. So if I can repeat what I said earlier, if they haven't reached a 7-year service from that date, and you're recording the liability in that state long service leave return, you record it as 0 for the return itself. However, once they take, or when they decide to take leave, then that calculation will be made at that time, and we'll be talking to the employers on each occasion around what that means and what that is. Okay. I'm not going to pad out the conversation too far. If we haven't got any more questions, I can always give you some time back in your busy days to continue what you do really well at. No one else? Mandy, did I miss anything? We're all ready to go. So like I said, just to reiterate this, the long service leave, the state long service leave return will be generated onto your employer portal tomorrow. You will have a month to complete it for all of your workers, your eligible workers, and then we would ask you to submit that by the 4th of March. If you're having any problems with meeting that time frame, please let us know. If you're having any concerns around the data or information you need to provide, please raise your hand and ask some questions, or give us a call or email us. Sorry, I just saw a question pop up in the chat. Mandy, do you want to answer that one? Or are you going to write back on it? You're answering it? Oh, okay, cool.
Yeah.
Excellent. All right. So I was going to put in the chat that form for the guide to the...
That's okay. I put it at the start.
You did? Oh,
I did.
My God. Like I said at the start of my intro, we're very lucky to have Mandy. She is a wealth of knowledge, but also is our expert extraordinaire, so just knows when to do things and when not to. So that's great.
Pinned at the top now.
Pinned at the top. Thank you so much. And you'll be able to access this once we finish up today, anyway. So if we don't have any more questions, I'll reiterate the fact that you can call us or send us an email around your specific questions. The form will be generated tomorrow, and you'll have a month to complete it. And if you're having any issues, just get in touch, and we'll go from there. So thanks everyone for your attendance today. Jump on our website, send us an email, follow us on our socials, and thanks for coming along, and we'll leave it at that. Thanks, everyone.